Good morning, ladies and gentlemen. Hello, and welcome to the show on this Wednesday, the 13th of January, 2020. Now, here's the thing, guys. Cryptocurrencies, gold, silver, they're all massively affected by these yields on the long end of the bond yields, on the long end of the yield curve. Now, if we take a look, what we see is that ever since the first of this year, ever since January till now, in fact, all year, the yields have been rising. They've been creeping up. Today was the first day they actually went down. You can see on this chart. Okay? And what we've seen is even with bad news coming from the world's central banks about cryptocurrency, and believe me, they're putting out the bad news out there. And now well, they're coming after cryptocurrency, trying to bring the price down using their voice. This is what the Fed does. They'll make statements to try to move markets. And they do this quite often. Not just move markets, they can move commodities like Bitcoin and cryptocurrencies and gold and silver. They just by a statement by these central banks can have a profound effect upon markets and stuff. But not only that, they're letting these interest rates creep as high as they possibly can, knowing that it's going to affect the price of gold, silver, and cryptocurrencies. And why they want to keep these gold prices stabilized. They've manipulated the markets for years trying to keep the price of gold and silver down because this reflects negatively on their currency, on the fiat currencies. And they're still at it. Let's open up the charts right here and take a look at what's going on. Bitcoin braces for a bombshell from the Fed chairman, Jerome Powell. Says Bitcoin has soared over the last year, adding more than 300%, smashing through its 2017 highs to tread fresh new ground for the first time in 3 years. So now what are they going to do? The Federal Reserve officials are hinting it could begin a tapering its huge asset purchases sooner than expected. All eyes are on Fed Chair Jerome Powell, who is due to speak on Thursday on a webinar audience hosted by Princeton University. So what they're going to try to do is they're going to try to dampen down this enthusiasm for not just cryptocurrencies, but gold and silver too. They're going to try to dampen that down. Now, you guys know that, okay, let's go over here and take a look at the gold price real quick. You guys know that I'm predicting something that these other guys, most of them aren't predicting, which is a little bit of a recovery going into this summer. You know how many of them are predicting right now that we're going into this a market crash of 90%? They're talking about we're going into the next Great Depression that like never been seen before. You just hear it constantly out there. And I'm the exact polar opposite, talking about a recovery coming this summer rather than a next Great Depression. I don't think it's going to be a real strong recovery, but nevertheless better than we got right now. In other words, the economy start to pick up a little bit. You know, things like businesses, you know. On the street corner there, you might see a restaurant open, and now they're closed, and they're boarded. Windows are boarded up, and it says building for lease or whatever, right? Well, that restaurant originally wasn't put there just for no reason. It was put there because that was a good location for a restaurant, you know? Still is. This thing has put it out of business. They'll come back. They'll come back and they'll come back with a new owner. Some new guy will come in and say, hey, you know, that's a great spot for the restaurant. The economy's starting to pick up this summer. People are wanting to go out to eat again. Bingo! The bank makes a loan. Banks start to make loans. As we move into next year, this is really going to start to bite. It's going to take traction in the form of inflation. Now, this can go in one of two directions, this inflation in 2022. One of the directions it can take is we can see massive inflation and a move into gold and silver and cryptocurrencies. But it can move slowly. The people will still continue to use the dollar. and money will start changing hands into this wealth transfer. And it might be a slow progression through 2022 and 2023, where there's a wealth transfer, but it happens slowly. In that case, the doom won't be as bad. We might muddle through it, kind of like we're muddling through this virus, you know? But then there's another scenario where greed takes hold of everyone and they dump the dollars really fast to move into alternative asset classes. That's the real doom scenario, is if it happens too quickly, you see? And there's a potential hazard that it could happen very quickly within a month or two. Well, you just can't transfer vast amounts of wealth out of one asset class and into another in a month or two without it causing major disruptions, and that's the doom part, because those disruptions could be widespread and lead to chaos, you know. So it doesn't mean that in 2022 that it's going to absolutely have to be doom. It could be a slow transition, more of a slow transition over into the alternative asset classes, rather than something that happens snap, like boom. Let's hope it doesn't come boom, because if it comes boom and it comes quick and they transfer out of the fiat currencies real fast, that's the doomsday scenario. That's the scenario that you got to be prepared for, because it can go either way. And at this point, I don't know whether it's going to be a slow transfer of wealth or a quick transfer of wealth. So this is what we got to watch out for, you know. That's the uncertain part in my mind. I think 2022 is the year we're gonna see this wealth transfer. And either way, guys, it doesn't matter. Gold and silver and crypto, 2022 is going to be the year for gold, silver, and crypto. I mean, when you get a wealth transfer of that magnitude, whether it happens slow or it happens fast, you're going to see tremendous wealth transferred over into these alternative asset classes. So that's going to be the exciting year. Exciting not just in the fact that we could be facing a doomsday scenario if the wealth transfer happens too quickly, but it's going to be a exciting year for people that own gold, silver, and cryptocurrencies, because they're going to see themselves move up in society, where an awful lot of people are going to take the beating, and those are the people that are doggedly stick to these fiat currencies. So now is the time when if you see Bitcoin, if the central banks come out there and they smash Bitcoin down to almost nothing, that would be a time to scoop them up. And, you know, gold and silver might take a beating too by these central bankers. But this is only a time for accumulation, and you should be thanking the central bankers for giving you this opportunity to get into these asset classes without breaking the piggy bank. Okay, here we go. 1859 for gold and silver. I'll tell you guys what. If you see it happen that way, you know, everybody out there is saying, okay, we're going into this depression. If you see this summer we go into a little bit of a recovery, you say, hey, you know what? Glenn was right. And he's probably right. Like, when it happens this summer, wait until it happens. You see the little bit of a recovery we're going into, and you say, Glenn's right. And maybe what Glenn said is going to happen next year, will be the year everybody moves into these alternative assets like gold, silver, and crypto. Maybe he's right about that too. Maybe I better get me some of that stuff, you know? Let's take a look now at gold's 1859. Let's take a look at silver. 25.43. Now, you're going to see a silver and gold bounce if these interest rates on the long end of the curve continue to fall. I don't think they can go much higher. The central banks can't stand it. They have to service the debt. Cryptocurrency today, $946 billion. What was silver? It was 25.43. So crypto is $946 billion today, with a Bitcoin price of of 34,470. It's starting to move back up a little bit again, you know. And you notice the interest rates have moved a little bit lower. And so this is very sensitive right now for gold, silver, and cryptocurrencies. If the central banks could let these interest rates rise all the way across the yield curve to just normalize them, it would crush cryptocurrency. Bitcoin would be worth $5 again if they did that. And gold and silver just crushed them. You know, they could just crush it, and they could crush inflation too if they could normalize interest rates. And the dollar would strengthen. And you know, this is the mechanism that the central bank has, is raising or lowering interest rates. They can't raise them. That's like being on a train going down the mountain, you know, and the train's out of control, but you got no handbrake. You know, that's the Fed. They got no brakes. It's gone. It's over. Okay, Dow Jones Industrial Average is up 24 points on the day. 31,093. We're looking at crude oil at 52.74, and it's down 47 cents on the day. Move index today is creeping up. We've got to keep our eye on our boys. 50.12. It's up 2.36%. No, 4.93%. It's up 2.36 points. This gets up to about 75. Anything over 60, they start to get nervous. So it's starting to creep up. Move index. U.S. 10-year today. This is a 10-year at 0.1, but we're going to take a look at the treasuries in general. Got to start my chart again. We're going to take a look at the treasuries in general here. Where is it? How do I get back on the regular treasuries? Click the back button. There we go. The regular treasuries in general, yields are falling all on the long end of the yield curve, starting at the 3-year and falling out to the 30-year. We're looking at a 30-year at 1.84 and the U.S. 10-year at 1.10, 1.10. And we're looking at a fall of about 3 basis points on the yield curve there today. Let's take a look at the dollar index, 90.29. The dollar's actually going up a little bit today. Thank you guys for listening to my report. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next show. Bye-bye.